You see, that's volatility. That's similar to August, where I actually lost a big chunk of my portfolio in August. I was around 60% in August, and I should have been now maybe 100 and 120% profit in my portfolio. But August was a very, very volatile period, and I was caught in a few bad trades. So here you have it again, similar situation with S&P creating volatility here and potentially some sort of distribution and reaccumulation happening. We need to find out if it doesn't break up around above 6.8, 6.75 with CPI data this week and the Fed interest rate decision. We then will be on the short side. Okay, I've mentioned it in previous videos. I think we can go 5 to 6% on here. Okay, so watch out for that zone of 6.4. Very, very nice zone there to be hit. We have 6.4. We have the monthly, which looks overextended as well. So I wouldn't be surprised if this happened here. Now, of course, the monthly can continue going higher as it has done previously. The S&P usually gets bought up quite quickly, but you have the bearish divergences and all these other factors. So be very, very careful here with managing your positions. Personally, I've moved more into cash and I've scaled out of some of my positions. And with crypto, I've stayed cash. I've only traded 2 ideas recently. Both were winners. And then I've stayed cash for the swing trades. In terms of the NASDAQ, I think the NASDAQ is probably important as well to cover. A lot of this stuff I've covered in the previous videos, so I don't want to just cover the same stuff. I know a lot of you guys are regular watchers, and I don't want to cover the same stuff every day. But if we look at the NASDAQ, I set out 2 levels. The NASDAQ looks a little bit higher, or is a little bit higher than the S&P, right around that all-time high level. And if we want to see real momentum in the markets, this has to break. This has to break. And I think that will drag the rest of the market higher. This will be stocks like Nvidia, which will probably drag AMD and all these other opportunities. But this week, you also have Tesla earnings. We've had Netflix. We have, I think, Intel as well. So we have to monitor earnings as well. It's early start of earnings season, and we need to monitor the situation. Netflix is a bad sign for the markets. The Russell sold off a bit yesterday. We had still in this kind of distribution phase here. And even though we've hit all-time high last week, Wednesday. So I don't really see anything different here. Still, to me, looks like we need some downside momentum, maybe 5%, as I said, in the S&P 500. 5% S&P 500 is a nice dip, and I think that's where we're seeing more buying. However, it's a bad sign that people are queuing up for gold. I will say that. It's a bad sign. It means that something is brewing, okay? We have to be cautious. November was a key moment that I mentioned for a number of weeks now as part of my strategy, where the market will decide where it's going to go. And so far, we're waiting for that November period, maybe late October with the interest rate decision to decide where the market goes. If the market finds something that they're unhappy about, if the market thinks that tariffs will be imposed on China with 150%, like Trump has discussed, then we are looking at a situation where we will go short. We will get dumped on. So be careful and be prepared. If that gets resolved as well as interest rates get dropped, we're looking bullish. There's 2 things that we should be looking at. CPI data will be a precursor to what's to happen with the interest rates.